First, may I invite on stage Ms. Akshima Ghate, Managing Director, RMI India, Mr. Bhaskara Rao, Chief General Manager, Union Bank of India, Mr. Laemel, Principal, RMI, Mr. Aggarwal, Founder and CEO, RevFin, Mr. Shesh Verma, General Manager, Commercial Clients Group, State Bank of India, Mr. Sumit Bali, Group Executive and Head, Retail Lending, Axis Bank, and Mr. Vikas Arora, Senior Vice President, Auto Loans, HDFC Bank.
Thank you, Gitanjali. Good morning and a very warm welcome to all of you. I'm Akshima Ghate. I'm Managing Director at RMI India. RMI India is a policy think tank, and we support Government of India, Government of Maharashtra, and many other state governments in the country on clean energy and clean mobility topics, especially that of electric vehicles. It is a pleasure to be here today, especially with such an esteemed panel, which is representing financial institutions, the leading financial institutions from the country and thought leadership. So I welcome you all. Before we proceed and we dive into this important topic of financing India's EV transition, I'm going to welcome all of you. So it's my pleasure to welcome Mr. K. Bhaskar Rao, Chief General Manager, Union Bank of India, Mr. Laemel, Principal, India Program, RMI, Mr. Aggarwal, Founder and CEO, RevFin, Mr. Shesh Verma, General Manager, Commercial Clients, State Bank of India, Mr. Sumit Bali, Group Executive and Head Retail, Axis Bank, and Mr. Vikas Arora, Senior Vice President, Auto Loans, HDFC Bank. So it's, as you can see, it's really a wide and a very great representation of the financial institutions. So welcome you all. Before we kind of turn to panelists, I'll just kind of give a little bit of context of where we stand today when it comes to EV financing in the country. I think most of us in this room would agree that if we would have talked about EVs a few months back, it was really something in terms of presence, in terms of penetration, was largely insignificant, but things have changed dramatically, if I may say so, over the last few months. As a country, we are seeing sales penetration reaching 5% almost, touching 5% of new vehicle sales month on month. Some cities like Delhi, Pune are actually seeing registrations of vehicles, like 10 out of every 100 vehicles registered last month in Pune were actually electric vehicles. I think that's something significant, and it's also kind of, hinting at the momentum that is building around electric vehicles. It's, not something that can be dismissed anymore as a nascent technology. There has been a lot, as we all know, has been done by the central government, by the state governments to bring us here. There have been a lot of efforts around demand creation, infrastructure creation, even supporting domestic manufacturing. But the big question really is, right now, the point that we are at, is this enough? And what would it really take for us to reach the kind of penetration levels we're talking about for 2030? I think many of us have heard targets like 30% EVs by 2030. What would it really take us to go there? I think one of the big things or elephants in the room, which as everybody talks about, is really the big piece around financing. We really need to mobilize the kind of capital, the kind of financing that is needed to reach those kind of penetration levels of really the mass uptake. According to our recent estimates with Niti Aayog, the quantum of capital and finance that would be really required for this transition from now till 2030 could actually be in terms of nearly 20 lakh crores across vehicles, batteries, charging stations, and which is really translating into a loan market, annual loan market of about 4 lakh crores in 2030. But where we are today in 2022 is really the question that we have in front of the panel today. What we are definitely, what we learn, we are facing as an EV ecosystem are high financing rates, high insurance rate, low loan to value ratios, and also lack of customized products that may be available to EV consumers today. A lot of it could be linked to the nascency of the sector per se in terms of ecosystem development. But more importantly, there are also challenges that are pertaining to different segments. Usually, when we look at EVs, it ends up being about cars. But there are segments which are at different levels of cost parity, technology, business model innovation, and hence perhaps a need for customized products where financial institutions need to pay attention to. And also a big role for OEMs-led financiers to kind of, come together with financial institutions to really trigger and catalyze the market. So that's where we are. I thought I'll just set the context and hence, now turn to our esteemed panel. I'm going to start with some of our public banks who've been very progressive in terms of establishing dedicated EV loans. Some examples are, Union Bank of India's Green Miles program, and SBI has a green loan program. So I'm going to start with you, Mr. Shesh Verma from SBI. Sir, SBI being the country's largest public sector bank, we see that you have a key role in setting the tone and the agenda for financing in this sector. So based on your experience so far, what are the most critical challenges the EV ecosystem you think must overcome right now to speed up the financing?
Thank you, Akshima. Hello. Thank you, Akshima. Actually, in SBI, or we can say in PSBs, our presence is there mainly in cars and commercial vehicle segment, and then manufacturers of vehicles, component manufacturers, and going up to even power manufacturers. Sorry. So there actually we have already, because in car segment, like Tata Motors, they are producing good number of electric vehicles cars. So we have already launched a car scheme with better terms. Better terms in the sense because see, the normal cost of acquisition is slightly higher in case of EVs. So we are providing more better terms in repayment. Repayment period is higher than the normal car loans. Similarly, rate of interest is also lower, although these are at the cost of our balance sheet. But in order to provide support, to support government initiatives, we are taking that hit. In two-wheelers, actually, PSB's share is very low because of low ticket size and our cost structure. So actually, we are minority players in two-wheelers, so there is no specific scheme for two-wheelers. But yes, for manufacturers of vehicles and component manufacturers and even going beyond the power suppliers, we are providing full support. Like in case of PLI linked loans, special schemes are there. So at better terms, we are providing finance to component manufacturers. Almost majority of the auto manufacturers and components are getting support for that. So we are there to support initiatives, and we are hopeful that going forward, when volume increases, we can provide more support in terms of interest rate as well as terms. One sector where we are actually demand is coming, but at a very low level. This city transport. City transports, in some centers we have seen demand for providing city buses. There we need some government scheme to ensure its viability, because viability, long-term viability is a major challenge there. But yes, it has huge scope. So as bank, especially at SBI, we are everywhere to support this initiative, and it will continue.
Really great to hear that. Thank you. Thanks for your opening remarks on that. I'm going to turn to Mr. Bhaskara from Union Bank of India. So you've established the Green Miles program. So maybe you would want to share what was really your thinking behind, setting the program, and what have been your challenges that you've been faced when it comes to providing financing to EV buyers, particularly, at the similar or often preferential terms to ICE, internal combustion engine buyers.
Yeah, thank you, ma'am. And I thank organizers for giving this opportunity. In Union Bank, we are supporting ESG norms. Basing on that, we have already initiated various products covering green deposits or rooftop solar product in along with the home loan. And in as a personal segment, vehicles also, e-vehicles we have started one special scheme we have launched it in November 21 in the name of the Union Miles. We are offering this product at 20 basis lower than the IE vehicles. Now our product is around 6.95% per annum rate. And for two-wheelers and three-wheelers, we are exploring tie-up with NBFCs in the pool buyout and co-lending model. As of now, we have around 470 vehicles we have disposed in the financed in the last 3-4 months. And we have already given instructions to the field to have the tie-up arrangements with all OEMs, and the dealer network is also we are taking care of. And we are expecting a good traction in the coming years. Just now it is picking up, and we are expecting a good traction in the coming months. Thank you.
Thanks. I think it's encouraging. So that actually makes me turn to Mr. Vikas Arora from HDFC Bank. You know, Vikas, it's really encouraging to see that HDFC is also developing dedicated loan products for EVs. And this, in fact, as we understand, is motivated by the overall strategy for carbon neutrality. So what has been HDFC's perspective on this emerging industry? And if you could also share, what are the challenges that you're facing in terms of financing in this sector?
See, Akshima, we as a bank don't look at it as a challenge in terms of financing. We are looking at it as an opportunity to help the nation move towards this transition, right? And when it comes to financing, just to give you an example on four-wheelers or a passenger vehicle side, I don't differentiate between a ICE vehicle or a BEV vehicle, right? I give the funding to the customer basis his profile. So I have a 100% funding program for EV vehicles, 7-year tenure program, and a similar interest rate. So we are not differentiating basis technology. Our differentiating factor is customer credit profile. And similarly, we are doing the similar kind of things for two-wheeler segment also. And it's not only restricted to retail financing of the thing. We have similar products which we have made for wholesale financing. Dealers would need inventory funding lines. So we have equally aggressive programs as we have for ICE engines for wholesale financing. So it's we are trying to, and as and when more business models are emerging, on the end mobility side, there are a lot of new business models are emerging. So all those business models or startups, we have a funding program for them. So it's basically a credit profiling of the customers that we are looking at, not restricting ourselves for EV thing. Yes, over a period of time when we have portfolios in place, when we have some visibility on how these vehicles are aging, right? Because battery is a primary contributor of costs in this vehicle, and it will age over a period of time. How those things happen, we will be able to fine-tune our offerings even better. That's all. So that's a...
No, thanks. I think that's interesting. And maybe later I want to hear thoughts from you. Is it a similar approach you have for other segments like two-wheelers, or you would foresee, like, when you say creditworthiness, but even like, three-wheelers, two-wheelers, is that something that will be on your radar in future? So maybe later would, love to hear your thoughts on that. I'm going to move now to Mr. Sumit Bali from Axis Bank. Sumit, you've had a really distinguished career in retail finance and also specifically in vehicle financing in your current role at Axis and earlier Kotak Mahindra Bank. From your perspective, how has the industry changed, and how do you see it evolving to really integrate EVs across all different vehicle classes and products?
Yeah, thank you. So the industry, the automotive industry in India has grown well, and as we stand today, So today, if you see the financing of EVs or the availability of EVs, it's at a nice confluence where there are ESG funds available, banks are focusing on ESG. There is a lot of investment going into electric vehicles. So the sense I have is, I think it'll be for electric vehicles, a multiplier journey, not a linear journey. There's a lot of infrastructure development happening, a lot of charging stations coming up. And my sense is if you have to see the three segments separately, one is personal two-wheelers, then the people mover, which would be three-wheelers and buses, and passenger cars. If two-wheelers, if you see, I think with the last mile delivery and some push from the local governments, you're already seeing that number grow very well. And three-wheeler again, a lot of initiatives by the local government, so you're seeing that move well. Similarly with bus, the traction is high. Passenger cars overall globally, big guys, big manufacturers are investing a lot of money. Volvo stated they want to be only electric after 2025. The amount, when you speak to auto manufacturers, everything revolves around investment in electric. So obviously this is going to be a good growth segment, and it's coming together at a point where bankers, policymakers, government initiatives, everything is falling in place. So my sense is it will be a fairly exponential growth. You'd mentioned about 2030. I think my sense is it may happen 4 or 5 years earlier than that, because this is something which is growing by leaps and bounds and aided by government policies. This is set to grow exponentially from here on. Thanks.
Wow, I think that's encouraging if we hear that from the financial institutions. Samir, founder, CEO, RevFin. Samir, I think RevFin, as many of us would have seen, you've been making news about recently raising 100 crores debt to finance EVs, especially in tier 2 and tier 3 cities, and also segments like auto rickshaws. So what has been really your process, diving into this space much earlier than the larger banks have? And what do you, if you want to highlight some key barriers that you faced, are you still, foreseeing in the sector?
Good morning, everyone. So we started lending for electric vehicles in 2018, when I think most of us had not even heard of electric vehicles. And we did so for two main reasons. One was there was this huge opportunity, and I genuinely believe that intra-city small commercial vehicles, two-wheelers, three-wheelers, four-wheelers, in the next 2-3 years, all of them will move to electric. Right? Today we talk about electric use cases. I think in 2-3 years' time, we'll be talking about CNG or diesel use cases. So that was the huge opportunity. The second thing, which I think is the most critical towards EV adoption, is the value that the end buyer or the end driver derives from it. I think that is the most critical. So long as the driver sees value in the vehicle, they will shift to that vehicle. And when we started, the dominant electric vehicle segment was the low-speed electric three-wheelers or e-rickshaws L3 segment, where there is a clear value proposition in terms of price of the vehicle and the earning ability of the driver. And similarly, with other forms of vehicles, two-wheelers, L5 three-wheelers, etc., so long as the total cost of ownership is lower, the drivers will shift to it. From our perspective, the biggest challenge has been to raise capital. Right? You just spoke about an announcement that we did recently, but frankly, it's taken us 3.5 years to get there. It's been very difficult to convince even equity investors to put money behind electric vehicles. So actually, I'm very delighted that there are so many different banks on the panel today. And this is the first panel that I'm doing where there's been more than one financier on the panel. So I think we can already see that shift happening.
Thanks. No, I think we've been really encouraged by the response when we were putting together this panel. So actually, thanks to all. And I agree with you. There are not enough financing panels on EVs right now. And I think, as you said earlier, many of them come at the end of the day where people probably have lost interest in the discussion. So I'm really glad, and thanks to the organizers for bringing up this topic.
Thank you for that, because the first thing I looked at when I got an invitation was what time is the panel.
Right. No, thanks. I'm going to turn to Ryan and complete this round of opening remarks. Ryan, you've been doing so much work around EV financing, particularly identifying the challenges and figuring out the solutions for India based on global experiences. And you've heard the panelists. So I'm not going to focus on you for challenges, but just listening to that, what you've heard from the other panelists, what do you think, and how do you see is the role of innovation in kind of addressing some of the barriers that you've heard right now?
Yeah, thank you, Akshima, and thanks to the panelists. It's great to hear about all the wonderful work you're doing, and also thanks to the government of Maharashtra for hosting this, and I'm very happy to be back in the city of Pune. We've had the privilege to do a lot of work here, and it's always wonderful to be here. I think the question I would ask is, what do we mean by innovation? I think I would say we actually don't need much innovation on the financial instrument side. And I would say that because we have all of the financial instruments that we need from current practices and from other sectors to make the transition to electric vehicles viable. I think the real question is, how can we be innovative in picking what is the right financial instrument that we're going to use for the particular vehicle and the particular use case that we're thinking about? And then also, how are we going to design that financial instrument? That, I think, is the real crux of the innovation that we're going to have to think about for the financial sector. When I look at all of the vehicle types and use cases, I think there are lower risk segments and there are higher risk segments. And the type of financing instruments that we're going to be looking at are going to depend on the risk profile of the asset. So if I look at a private electric car, right, generally the buyer is someone who is credit worthy and can afford to repay that loan in a timely manner. So something like just a traditional auto loan is going to work really well for that segment. And I'm extremely excited to see the banks on this panel offering interest rates at similar or even discounted rates compared to internal combustion engine vehicles. And I think these banks have a big role to play at their retail branches in terms of influencing the decisions of customers. They're going to have their branch managers interacting with the people who are going to be considering buying these vehicles, potentially fleets as well. And so I would also say, how can we think about how banks can influence customers' decisions over time? The other instruments that I would point out are more complex, but also very important, and I think we need to think about them for the higher risk segments. And everyone has a role to play in this financial transition. I think when we look at the central government, we are very excited about the potential to include electric vehicles under the Reserve Bank of India's priority sector lending guidelines. This program basically asks banks to dedicate or allocate a certain percentage of their bank credit to priority sectors. Agriculture, is a common one that many of us are familiar with. And inclusion of EVs has a great potential to send their signal to the market that the government is increasingly prioritizing electric vehicles. It also has the potential to create a more equitable EV transition by ensuring that capital is accessible to sectors that are typically credit deficient. I think if we look at state governments, there's a great opportunity for them to offer interest rate subsidies. We see this in the Delhi government. They're currently designing and rolling out an interest rate subvention program. This type of subsidy or buy down on the commercially offered interest rate can really help lower the cost of financing and serve as a bridge that we need in the near term. OEMs, also have a role to play. I think the product warranties that we're seeing in the market right now are increasingly improving. And these types of warranties are just like the ones you might have on your cell phone or any type of product you buy. They help ensure that we can, cover the costs of any repairs that we might need on the products that we're buying, and they help ensure quality over a period of time. The timeline on some of these warranties for battery products is only increasing, and it's really great to see that. I think that's going to give buyers and investors a lot of confidence in the market. I think the last point I'll make is around development finance institutions. I know there's some here in the room. I also know we are all working with some to varying degrees. Loan guarantees are another type of financial instrument that we would strongly like to see develop here in the Indian market. I think already we're seeing Niti Aayog has designed such a program with the World Bank, and that particular program is valued at about 300 million US dollars or 2,200 crore rupees, and it's going to offer insurance basically in the event that there's payment delays on projects related to renewable energy, electric vehicles, batteries and energy storage. So I think this type of guarantee mechanism that can provide a backstop to banks can help them ensure that they can bring down interest rates slightly and also, therefore lower the cost of financing for these projects. So there's a lot of solutions we have at play here, and it's really about picking the right one for what we're thinking about.
Yeah, thanks Ryan, and thanks to everyone for your opening remarks. And I think Ryan has provided us a good segue into the solutions segment of this discussion. So I think this round, I really want to focus on the solutions part and learnings that we may have from other sectors and from our past experience. So Sumit, I'm going to turn to you first. And just looking in from an overall retail lending perspective, do you see any solutions, be it from government or industry interventions that have worked for other sectors, really, and that you believe should happen for EVs? Like by other sectors, I mean renewable energy and the other, clean technology sectors. There are solutions that you believe should happen for EVs to accelerate the financing market?
So I think the government intervention is very necessary to develop this. If we step back and see, I think one of the largest issue as an economy we have is the oil import bill. I think the economy skips a heartbeat as the crude price rise. So there's a strong case for the government to also look at it to make it more commercially viable. It could mean lesser taxes, lesser registration, and it makes good economic sense because not only are we saving on the import fuel bill, we are also talking of cleaner environment. So certainly that will be really helpful, and nothing in India works better than giving a price advantage or a lower price. I think it really moves well. Other thing on the two-wheeler and three-wheeler, which are a bit more of a standardized product, if we can have standards on the batteries so that the charging infrastructure or the swapping of battery becomes seamless. I understand a lot of players are tying up with, say, petrol pumps to have a battery swap facility available there. So I think that really will help because one of the uncertainties is the mileage and the charging infrastructure, etc. I think this will, if it becomes as quick as refueling petrol or diesel, I think it'll be wonderful for that. We need to also keep in mind the disposal of batteries, some norms around that, because that that is extremely polluting. In fact, there's some studies which says that part of the upside you see on the lower emission gets taken away by the how you dispose the battery. It certainly we can do something better there. And I think as and when if it's commercially viable, more manufacturers step in. Nothing works more successfully if you see more cars on road. I think that'll really be helpful. In my personal view, everyone here, we must experience a test drive of an electric car. It is excellent, the torque is instant, it is silent. I mean, once you experience it, I think you will really understand how quick, efficient and drivable it is for a daily use. I think that'll work really well. These are the suggestions I think will really work well. Thanks.
No, thanks for that. Very well noted. I'm going to turn to Sameer now. Sameer, from a RevFin perspective, you have currently a good view of the developments in the fintech space too. What do you foresee as the role of digital technology as a solution in this segment?
Yeah, so I think digital technology has two uses. One is for efficiency gains in the process, and the second is for risk mitigation. So let me talk about both of those. When we look at efficiency, so I'll maybe take our own example. We've created a process where a customer can come in, apply for a loan through an app, go through the journey, get a decision on their loan, sign all the documents, set up the repayments, everything done digitally in under 15 minutes. Right? So customer can actually walk in and walk out in an hour with the vehicle, with the loan all done. Right? So that's the kind of efficiency gain that digital gives. Also because if I look at the spread of EV across the country, there's a huge demand in tier 2, tier 3 cities. It's not feasible to set up physical distribution for financing companies. So again, EV adoption gives that efficiency in terms of commercial viability as well. So that's one use of digital. The second is for risk mitigation, and I'll again take a few examples of the things that we've been able to do. Just for perspective, 97% of our loans are done in tier 2 or tier 3 cities or towns. And 85% of our customers are first-time borrowers, so they have no past credit history, they have no banking transactions, they don't have any formal sources of income to show. Then therefore, how do you underwrite such people? So what we've done is, we've come up with a way where we are able to underwrite people based on their personality and behavior. So we do psychometric testing on people to understand intention to repay. We use biometrics, we use gamification to improve collection performance, etc. So that's the second form of use of digital. And finally, we also embed telematics devices in all the vehicles. That gives us a very good understanding of how the vehicles operate, different brands of vehicles, different technologies of vehicles in different geographies. So these are all basically the uses of digital that we've experienced.
Sure, thanks Samir for that. Mr. Shesh Verma, I think you work with a lot of large corporate clients as well. So what do you think is the role of industry players? And when I say industry players, I'm talking about OEMs, manufacturers, even fleet operators. What will be their role in easing the financing? Do you foresee them, in a way joining hands with the financial institutions and being involved in that, engaged in the process to ease financing, given where the technology and the penetration levels are?
Yeah. Hello. Yeah. Actually, EV, presently we are focusing for single purpose of reducing pollution in cities, especially large cities like Pune, Maharashtra, this Mumbai, Delhi, etc. But you see, it has this EV adoption, it has a huge role opportunities in rural and semi-urban areas also. Because you see, the demand will be coming in those centers. Only large cities are not sufficient to create huge demand for manufacturers to provide product on affordable rate. So you have to move beyond large cities, beyond pollution. You have to create scale. And second thing, one thing which I expect from industry, they are actually focusing on pushing EVs. That's a good idea. But you see, we have to adopt technology as per our local requirements. Like in this country, the amount of fuel which is used for mobility, almost similar amount is being used for air conditioning of vehicle. Because we are having a huge amount of sunlight almost throughout the year. So my expectation is from industry to convert this sunlight into energy and utilize in vehicle itself, instead of depending on grid. Because you see, normally, presently, more than 50% of grid power is coming from fossil fuel or coal. So actually, we are transferring pollution from cities to powerhouses. So just don't push EVs. Let it be self-sufficient. You convert solar energy into power. So that will be a better sustainable option. So that is my expectation from industry. And from government also, like they are pushing so many sectors. One of the live example is housing sector. Similar priority is required to be given to EV sector. You classify it as priority sector. That will reduce cost of funding for us and will pass on to manufacturers and buyers both. And it will not hit government's tax. This is one thing which can be done without any negative impact on government taxes. So you classify entire value chain, whether it's a producer of exclusive EV or buyer. You classify it as a priority sector. Will pass on entire benefit to this segment. So these some small steps are required to boost this EV movement in long run. Thank you.
I think I totally agree with you on the diversification and going beyond urban areas, and even products that can cater to areas beyond urban and the rural demand. I actually have a similar question for you, Mr. Rao, where you're also working with large corporate clients. So same question, like What do you see is the role of industry players in easing financing in the sector? And how can we encourage the industry players to play their part here?
Yeah, it is already in place, and wherever the industrial players are coming, we are considering basing on the merits, and finally the viability matters, and whether this product or process, whatever it is, that is required a proper assessment and all. Now, as on date, I think we are not seeing any hurdle or any challenge in this. Wherever it is coming for, we can do. The only thing is we need to push the numbers in the market first initially. For that, the respective requirements, that is infrastructure or charging stations, are once it is sufficiently established, already the product and policy is already available. And we are developing the products in finance segment also. And OEM manufacturers they are also ready for with various models and all. So the requirement is the infrastructure which is supporting these vehicle movements, the anxiety which the owner is having regarding his charging availability and all, that need to be taken out. Once it is there, then automatically it will push, and we are seeing a good traction in the days to come.
No, thanks. Vikas, I think you've heard, we're talking about numbers, and I think so far the approach has been, because the action has come from government, a lot of it has been on subsidies and incentives. So just your perspective, where should now we be looking beyond providing incentives to help enhance lending?
You are asking from the industry perspective?
No, I think overall sector perspective, yeah.
Right. See, today, if you see, there are knowledge about EV technology is almost there. People are aware that this is a technology. The thing is that there are anxiety around a couple of things. One is the product reliability, right? That needs to be taken care of. And like Ryan said, warranties or a good guarantee program from reputed OEMs, that will take care of that anxiety. Another anxiety for this transition is range anxiety. So that's where, I read Maharashtra government's EV policy. That's take care of a lot of things. A 3x3 kilometer grid in towns, or a 25 kilometer on major highways on both sides, charges should be available. So those things will take care of that range anxiety. And another important thing that is required is product range across various price points. So this will lead to a lot of green plates on the roads. That's when the whole confidence loop starts coming in. So these 3-4 things, and yes, subsidies are required to sustain the momentum that is there. Like Mr. Verma said on PSL funding, that's very important because that aligns a lot of vectors towards this funding. A lot of other, maybe NBFCs will start coming into this play. They will align a lot of vectors financing whichever pyramid of the customers that we are discussing on.
Thanks, Vikas. Ryan, I think you've been tracking the global developments on EV financing. So just from that global perspective, what opportunities are you foreseeing for India, that we can really capitalize on to grow the EV finance industry in tandem with, the growing penetration at the targets we are, looking at?
Thank you, Akshima. Yeah, I think there are a few trends globally that really excite me on the finance front. I think one of them is around blended and concessional finance. I think both of these have a lot of potential to serve as a bridge between kind of the higher risk market that we have today and the lower risk market that we know we will have and want to have in the future. I think when we think about blended finance, there is a role for pooling together capital from a variety of different types of investors. It can be banks. We can also think about impact investors. Philanthropists can even get involved. And this allows us to offer finance at a lower cost of capital. And we're already seeing this take place with some development finance institutions. I just saw in the news the other day that IREDA, which is the Indian Renewable Energy Development Authority, recently made a 267 crore investment in BlueSmart, and BlueSmart's going to be using that, or not an investment, but a loan. They're going to be using that loan to purchase 3,000 EVs for their fleet. Similarly, we're seeing state governments receive this type of finance. Some state governments have received this for rolling out charging infrastructure at pretty low interest rates, I believe even as low as 4%. And Lithium Urban Technologies, which is a prominent fleet operator for commuter services in the country, we've seen them get this type of financing as well from IFC in the early days when they were standing up. So I think blended finance, concessional finance are great opportunities. The other ones I would point out are project finance. I think in particular for charging infrastructure, this is a really promising and probably underutilized finance instrument that we have. I think some of you probably were here yesterday and heard Mr. Uday Kemka talking about infrastructure capital. This is a really promising opportunity because generally these projects have really large loan sizes, so the investors aren't looking for as high of a rate of internal rate of return, so they can offer a lower interest rate for these projects. They are difficult to structure. They have a lot of contracting challenges, but if you can get them to work, they can have long-term cash flows for 20 plus years, and it can work really well for the financing. So I'd love to see this on the charging infrastructure side, even potentially for electric buses. And we're seeing this recently in France. A bank called BBVA recently did a project finance deal for charging infrastructure with a company called Allego for about 2,000 fast charging points in the country. And lastly, I'll note green bonds. I think green bonds is also an instrument that we need to be thinking about. Many of you probably saw in the union budget this year that there has been a mention of the use for green sovereign bonds, potentially for utility scale renewables, battery manufacturing, and other sectors, hopefully EVs. I think state governments, DFIs can also be thinking about issuing green bonds and getting that type of capital, specifically debt, from fixed income investors can hopefully offer lower cost of capital for these types of climate-friendly projects. So yeah, overall, those are three trends that I'm seeing, Akshima.
Thanks, Ryan, and thanks everyone for the insights. We're just kind of reaching time, but before we close this panel, I'm just going to request for 20-second, 30-second remarks. So Ryan, if you can hold the mic back, it's a common question to the entire panel. The question really is, imagine we are in 2030, or perhaps as Sumit said, in 2025, and we've reached the kind of levels of penetration we've really talking about. I think at the national level we're talking about 30% or perhaps more we've reached. What is one thing that we would have done right in 2022, which is today, to really make us reach those penetration levels? So your 30 seconds, Ryan. Actually, time's up, so if you can keep it short. Just one last remark from all of you, and we can close.
Yeah, keep it very brief. A few of us have mentioned priority sector lending, PSL. I'd love to see that included, next year in the near term.
I would vote for product guarantees or warranties programs.
Mr. Verma, what is one thing that you will want to see?
Let the EV funding starting from the component manufacturers and vehicle manufacturers to buyers, everybody thinks would be classified under priority sector lending.
Right.
That will provide a huge boost and it will reduce cost of acquisitions.
Great. We have a second vote for priority sector lending and, of course, the product guarantee. Samir, over to you.
Okay. I think from my perspective, if we stop seeing EVs sector as different parts like OEM, financer, charging, swapping, all of that, instead of that, if we just see it as one big ecosystem, and if all of that ecosystem develops around the driver, I think that's how we should approach it, and we should think of it as like one big entity that's serving all the needs of the driver.
I agree with most of the suggestions. I would just say that increase the awareness about EV. The life cycle of EV is longer. It has lesser moving part. It is better to drive. Rest all they've added. I think more and more products on the road and everyone being offered a test drive, that'll do a great, there'll be a great step in developing the EV market.
Thanks.
Yeah, my view is supplement to all. The awareness programs has to be given in a big way so that the tier 2, tier 3 cities also start looking into this area. Thank you.
Thank you. Thank you, everyone. I think really what we have is a menu of options today from what has emerged in terms of really, channelizing and catalyzing the EV financing market. Thank you, everyone. It's been an honor to moderate this panel. I would like to thank the organizers, Government of Maharashtra, for this opportunity to RMI to host this panel. More importantly, I would like to specifically thank my colleagues, Isha Kulkarni and Mandar Patil, for really bringing together this panel. So big round of applause for the panel and for my colleagues. Thank you all.
Thank you so much for that lovely panel discussion, and a huge thank you to RMI for organizing this session.